This is the first time we're trying to go live on YouTube and X. Hopefully, it's working. We'll see what happens, but we're trying. Shimon, how are you? What a day!
Well, I'm doing well. It's an interesting day in the markets, just like we predicted. They definitely front loaded the pain, but I'm doing well. How are you doing?
It's painful, man. Help, 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 help me. Um, no, it's good. I like talking to you because we bounce off each other. I feel like today Shimon's gonna bring us a wave of hopium because while we both agree that maybe in the long run this is the best thing to do, man, it's definitely painful now. And I think not only is it painful because of the magnitude of the tariffs, it's also the uncertainty. I mean, it's a global geopolitical game of chicken, and we have a Fed that is hostile to the Trump administration. The Fed should be separate from the presidency, that's for sure. It should be an independent Fed. We do know that Jay Powell does not like Trump. So there's egos at play. And the problem is that when you have a lot of egos and Trump has one, it's never good. It doesn't yield predictability, and that's what I'm afraid of. How are you doing?
Yeah, I'm doing good. I mean, look, first of all, I don't worry about the Fed at all because I completely changed my mind about them. They cannot maintain a big difference between the 2 year yield and their overnight Fed funds rate. Because if they maintain a difference over too long, people just will drain. It's basically unsustainable. Like imagine if the Fed offers you a higher interest rate than the bonds offer you, what you can do is just like sell a bunch of bonds and then put the money at the Fed as banks, and even the government can do it, and then it's like going to end at some point. So look, we predicted in our last show that the most important thing they want to do is lower yields. I'm looking at the yields now. When Trump took office, let's say when Trump won the election, it actually doesn't matter. When Trump took office here, I'm looking at January 20th, it was 4.28%, 4% and 28 basis points, right? Now we are at 3.73. Okay, so if you think about it, that difference, right, times the entire debt that they have to refinance is a huge, huge, huge savings, right? And so that's, I think, the number one thing that they're trying to do, and they're doing it very successfully. Now, the other thing they're trying to do with the tariffs, I think their goal is very much not so much to onshore production, but to lower tariffs that other countries impose on us. And I didn't know too much about this because, we went to a Keynesian school for our business school, and there it's all like free trade and free trade agreements and all of that. But basically, now over the last couple of days, I dove into these tariffs, and it's basically we're leaving a lot of money on the table. And to understand this, instead of talking about entire industries, I wanted to quote an example that I read somewhere about. Imagine Grey Goose vodka, right, that's manufactured in
Okay.
France, and Tito's vodka that's manufactured in the US. So like we don't have any tariff on Grey Goose vodka that we import from France. They have 100% tariff on our vodka. So then what this means is that we cannot sell our vodka in France. Now, Trump comes and says we're going to put 100% tariffs on French vodka just for the sake of this exercise, right? So then what happens? Suddenly, here, the price of Grey Goose doubles, but the price of Tito stays the same. So people are just going to switch to consuming Tito's, no inflation, better for the jobs here. Now, let's look at France. Suddenly, France, their sales completely dry up, and that is only because the US is such an important consumer. If the US wasn't such an important consumer, we wouldn't be able to do this. But because we're such an important consumer, suddenly France stops selling Grey Goose to the US. How much is the sales to the US out of all their sales? I don't know, 35%, 50%. So it's a big chunk. So then what happens? Then the French government has to decide. They can either retaliate and increase the tariffs on Tito's even more, or they can lower the tariffs on Tito's. And so, what do you think they'll do with their economy is much weaker, right? Their tolerance to unemployment is probably much weaker. We have great employment. We have very good. Everything here is better. So basically, in aggregate, I don't see any way for them to be able to keep the current tariffs. And somebody said it on Fox News. It's like, look, the status quo hasn't been working. This is the first time that somebody's trying to change the status quo. And so that's what I think. And to talk about China, it's even worse because I mean, even worse for them because, like, they so many people that are employed at manufacturing things for the US, right? So like you gave an example that you wanted to buy something to your for your daughter, and you're very worried that it's gonna go up by 50%. But guess what? If you can't find it here, maybe you just don't buy that thing. Maybe like, first of all, I think you can find the same things manufactured here, or maybe Vietnam negotiates, because Vietnam are really screwed, and so they negotiate with the US, and then production goes from China to Vietnam. Like it becomes very interesting. But like, worst case scenario, you just don't buy that thing, and they have like 30% unemployment. Their economy cannot sustain 30% unemployment. So that's my bet. My bet is that this will be very effective in getting other people to drop the tariffs, and then by the midterms, the tariffs will be off because we would have renegotiated our trade, and the yields would be down. We will refinance the debt, and then they will print a ton of money and give it to people, and that's what's going to pump the stock markets. That and the lower interest rates. So that's kind of my very, very high level take on this tariff situation. What do you think?
I mean, I love your optimistic take. Um, I'm a little bit worried about uh, this assumes that a lot of countries are going to act rationally. And you're right, there's a big point about we're the only ones who can do this in the world, truly the only ones. Now, we're assuming everyone acts rationally. I hope they do. Germany and France already came out and said they're going to, hit back. And Ursula von, whatever her last name is, from the European Union came out and said the European Union is the largest market, but they're not. They're not the largest market. It's definitely the U.S. So these tariffs are heavy. Um, I think, and we talked about this, I think it's an opening salvo in the negotiations. And Eric Trump tweeted about this and said, I've seen this movie my whole life. Obviously, he's the son of Donald Trump. That Donald Trump starts out hard, and then negotiates. He expects a deal to be made. I hope countries make a deal instead of coming up with some sort of retaliatory tariff war, because that's not going to be good for anyone, and ultimately not going to be good
Let
for
me
that
just ask
country.
you, can they do retaliatory tariffs? That's my
I mean,
big.
they can, but they're going to ruin themselves. The question is,
Can they do it over time?
no, over time they can.
So that's what I'm saying. I think that's what he's betting on. Even if they announce retaliatory tariffs, suddenly their unemployment will start ticking up. And then how long can they sustain them?
What Trump needs to do, what he needs to do, and what they're trying to get passed through Congress, and he talked about doing it actually as far as early as this weekend, is we need to cut taxes in the U.S. So this whole thing of tariff is a tax on U.S. citizens. So he has to cut taxes to enhance the purchasing power of the U.S. consumer even more. If he does that, then because we're the biggest market, because we are who everyone wants to sell to, and you're right, again, we can do this. Only the U.S. can do this. If he cuts taxes, the consumer here can buy more theoretically, right? Because they keep more of their money. And so that enhances our negotiating power. He has to get that done through Congress. What they're passing through this continuing resolution, which is essentially do what they did before, moving on, keep on moving, is they're inserting in their $5 trillion debt ceiling increase. So they don't have to worry about debt ceiling. Although the interesting part is, you want to cut all these, you want to balance the budget, and you want to cut all these costs. Why do you need a debt ceiling increase? That's a whole separate topic we should talk about. So there's just a lot of mixed signals, and I think the markets obviously don't like uncertainty, and uncertainty is extreme right now. I mean, you and I have been at this for, we'll call it 20 years of our professional lives. There are people who've done this for decades, 30, 40 years, have never seen anything like it. I mean, this is truly unprecedented times. And the interesting part is, before Scott Bessent, what became the Treasury Secretary, he talked about the need for new Bretton Woods, or new Plaza Accords, essentially, a global trade negotiation. He said it's going to have to happen next 3 or 4 years. and he wants to be a part of it. This is what they're doing. They're resetting global trade, but in the process, it's very painful.
Yeah, I mean, it is painful, but I think that it's pain that we had to endure at some point because we knew that a lot of the economic growth. I mean, Professor Peter St. Onge was talking about this. A lot of the economic growth was just in the government sector, so it was
Yeah,
like
70% of jobs.
exactly. So then we knew that this is not sustainable. And then the question is, do we keep doing it? I think if Harris would have been elected, they would just kept going until something happened and then the bubble pricked and it would be out of control like 2009. Now I'm thinking it's much better because it's a controlled burn. It's like, I used to live in California where you got like 3 months of forest fires, you couldn't breathe the air because they didn't do controlled burns to protect like the wildfire to the wildlife or something.
Yeah,
So this is like the controlled burn, and they're using it. Look, I just want to show you something. I
yeah,
have here the difference between the Fed funds rate and the 2 year. So the 2 year here it says 3.73, right? Is as of today, and the Fed's fund rate is 4.37, right? Now, for you to understand why, or for our listeners to understand why this is not sustainable, it's because as a bank, right, I can get people to deposit money and I pay them the 3.73 percent. And I have a lot of money, right? So like all of the savings, all of the interest is tied to this rate, right? And so I take the money at 373 and I just give it to the Fed and the Fed gives me 4.3. How long can this be sustained, right? So like this, you see that sometimes the green line is over the black line, sometimes the black line is over the green line, but
yeah,
they always kind of converge. So I think this is like super bullish. I think that the Fed will have to lower rates from 4.3 to 3.7. Now just think of how painful it was for the stock market when they increased. Remember this during COVID, they lowered it to zero and then they increased it from like 0.1% up to 5.5%. This was like super, super painful, but the stock market still was able to recover from that. So now when they start lowering this,
what
it's
what
really fantastic.
what's frustrating to me about, can you show the chart again for a second? What's
Yeah.
frustrating to me is, I don't know if our listeners remember this, but in 2020, um, the Fed was extremely late to raise rates. Okay, so you see this, yeah,
The
exactly right there. They were late, and there were many economists calling. They were saying,
yeah, you
"Hey,
see
you're late,
the
you're
green
late."
line is over the black line here. That's what Alex is talking
It,
about.
exactly, exactly. So the market was pricing in, but they should have started raising rates even before that. And the major problem with that, is because it was so late, they slammed hard on the brakes and they jacked rates up. Look at the velocity of that black line, actually the green line as well. The velocity of increasing rates. Last time, by the way, it happened. If you look back, the last time there was this velocity was 2006, 2007, and then we had the housing crisis. So they were late then. They're late lowering rates now, and this is caused by the Fed. I mean, for as much power we put in the Fed, they do these dot plots, like here's what the rate's going to be. How they ever predict it? And they never get it right. We will not, inflation was transitory. That was a freaking thing, right? That they talked about. Then it was, then raising the rates was, they slammed on the brakes. They froze the housing market. Now we've Biden, especially in the last 2 years, and this isn't even a political discussion. It just is. We're not saying Democrats, Republicans. We're not right now saying like policy one. It's just Biden, especially in the last 2 years. The administration printed a lot of money. I think it was like 300 billion in the last. I don't remember how many months right before the election when Kamala was running against Trump. Alone, when you print so much money, you flood the system, right, with fake GDP. Like a good example that we use is, I can pay someone for all day and all night to stand there, dig a hole, make a 6 foot hole, fill it up with the same dirt. Now dig it a hole again, fill it up with the same dirt. Is that GDP? Yeah, it's GDP additions. Is that actually productive for anyone? No, it's not. It's completely wasted work. And we see this in many industries. And when you have this kind of waste, education is a good one. There's charts, and we can try to pull it up, but the number of teachers grows at, like, I don't know, a nominal percentage per year. The number of administrators skyrockets. So what are all these administrators doing there? Why do you need such a huge administration to administer higher ed? Especially when students are supposed to be self-taught, self-driven in the universities. It shouldn't be flooded with administrators. Like, why? These are fake jobs, and we've been flooded with these fake jobs, and it's tough, right? Because this pain was supposed to come. I'm kind of talking to myself too. I'm venting a little bit because this pain was supposed to come. It nobody wanted to deal with it, and Trump is dealing with it. Now whether we believe that he's the best one to do it, that's probably up to everyone's different choices. But someone had to deal with it, and if Kamala won, she would have had to deal with it. This was coming regardless.
Yeah, I mean, I just think the big question now is like, will the other countries be, not even will they be rational? Because I'm sure on the long run they have to be rational, but like, will they be smart and figure out that, like, look, this is something that they very quickly have to renegotiate? Or will they try to, like, drag their feet, and then unemployment goes up, and then the government has to change, and then the new government does the right thing? So like, those are the two scenarios. I'm basically worried about the idea of them dragging their feet. But then the other issue is, if they drag their feet, then it really will encourage production in the US. And what we didn't talk about, and frankly, I don't know, I'm not, because I'm very kind of focused on tech, and the tech portfolio has been taking really, really heavy hits. I'm not like one of these like rah rah MAGA people, let's manufacture everything in the US. But then I started thinking there is an opportunity. So you know how electric cars, because everybody gave up on them, Elon Musk was able to do a company here that leapfrogged all the old technologies and basically used kind of a bunch of new manufacturing technologies that are just like better, right? And now, if it was just incremental, if everybody would have worked on electric cars and every year they released electric car models, maybe you wouldn't have this leapfrog in technology. So I'm wondering, right, because manufacturing is gutted in the US and it's practically non existent, does this basically present an opportunity to open the most high tech manufacturing in the world, in the US currently? And suddenly we can actually become like a manufacturing powerhouse for the world. Now, I know it's very ambitious. I know it will take a very long time, but hopefully the markets can start pricing these things in before they actually are built. Like, if people, we already know that people are committing a lot of investment here. Like, I just heard Jensen Huang talk about the tariffs, how they'll have very minor impact on Nvidia in the short term. In the long term, no impact, because literally they're recreating everything that is in Taiwan. They're recreating it in Arizona. So I think the market is kind of already pricing it in, even though the plant in Arizona doesn't exist. Like, you can just model out the phasing out of the tariffs. So like, what do you think about this whole idea of like manufacturing in the US, especially how will it affect the stock market, both the Nasdaq and the S&P?
So look, there's a couple of things in there, specifically in chips. There was a great discussion with Jensen. I think you alluded to that. Um, they're moving chip production to Arizona. It's not quite as good as what it is in Taiwan. It's pretty good, and we'll get there. I think the second thing is Trump actually, he's exempting tariff. He's exempting chips from being tariffed. So that's quite important. I mean, the market just sold off everything. But if you look at Nvidia, I don't understand why Nvidia necessarily is selling off, because there's an exemption for chips.
Mm-hmm.
So there's that part. By the way, the market, as we see, sold off, rebound, and now tanking again as we're talking. I don't necessarily think we need to manufacture everything in the U.S., right? Like we talked about this earlier today before the show, just you and me. Like, you said T-shirts. Yeah, why do we need to make T-shirts in the U.S.? We don't need to be the manufacturing hub for everything. That's why I'm hoping the best market is a global free open market, but one in which we are also not tariffed. I'm hoping this is a negotiating strategy and countries negotiating against Trump. But I mean, right now it's very clear the market has no idea how to price it.
So just to clarify, you're thinking that it will not have a sustained enough impact to shift manufacturing, that it's
I
just
think it takes a while to shift manufacturing. It takes a long time to shift manufacturing to the, to domesticate manufacturing. The
Mhm.
5, 10 years to do it at scale. Plus, do we really want to domesticate the manufacturing of pens, right? Or of like I don't know, what we probably don't want to domesticate everything, and so some things have to be done and should be still done abroad. Yeah, by saying we're going to manufacture everything in the U.S., that's not strategic. That's my
Well,
worry about Trump is it's not strategic.
I didn't say everything. I'm just saying, because I gave the example of Vietnam, right? Like if China doesn't negotiate, right? Let's say China doesn't negotiate, that doesn't mean that Cambodia and Vietnam can't negotiate their own things, right? And then suddenly we start buying the t-shirts from Cambodia and Vietnam instead of China, for example, right? So it's a global, that's the other nice thing, which is like we're the first ones to do this. And so now somebody said something about like everybody's panicking and trying to figure out how to deal with it, but there's like a huge prisoner dilemma, right? Like, okay, the EU maybe can impose stuff on all their members, but most of the world is not the EU. So you have an individual country that can just say, okay, look, we're gonna um, you know, we're gonna remove tariffs to you guys. And then suddenly they can manufacture the things that another country that manufactures the same things, uh, if they keep the tariffs, then they're doubly screwed. Then they didn't get anything from the US, and they also lost jobs to their neighboring country. So it's really interesting when you think about
we we live in unprecedented times, my friend, and we're watching just major geopolitical shifts, and I don't know. It's hard to even opine and project what's going to happen. If you look at even opinions online, it's all over the place. Well, look at them. Yeah, go ahead. What were you gonna
No, I'm just saying I don't care too much about opinions online because we already came to the conclusion that
We
there's
are.
a lot of noise online and it's hard to know who has the signal. I mean, look, I'm looking at the Nasdaq. It's only 15% off the all-time high, right? So we're not even in a crazy recession, right? We're not even in a crazy recession, and they announced this, right? So, like you told me the Trump tweet on Truth Social that basically said the operation succeeded and the patient survived, and now the
Yeah.
patient is going to like thrive or whatever. So, like, we're 15% off all-time high on Nasdaq. We're 20% or 22% off all-time high in Bitcoin after a meteoric rise, right? We went like to like 109,000, but like, I mean, people forget, like, that here I'm looking at a list. So in September last year, so that's another thing that I wanted to note about Bitcoin versus the Nasdaq. I really think, and this is my thesis for a long time, I really think that these tariffs will decouple Bitcoin from the Nasdaq. Because what has happened until now? Until now, when the Nasdaq goes up, Bitcoin goes up more, and when the Nasdaq goes down, Bitcoin goes down more, right? That has been the traditional view, right? And then people looked at Bitcoin as a risk-on asset, right? But now you think of the Nasdaq, right? We went back to, if you just look at the history, let me just open the Nasdaq here so I don't give you false information. Okay, so like the we're at 454, right, for QQQ, and we basically went down to September of 2024. That's the most recent time where we had this price. Okay, so now we're in April. We went back to September. Bitcoin is at 81,000, right? And Bitcoin in September was 53,000, right? So Bitcoin went down in terms of time. I'm not talking in terms of percentages, but in terms of
Yeah.
time, it suddenly is outperforming the Nasdaq. And I think that's like very, very important because Bitcoin is a global asset and many people another thing that we should talk about is the investments in the US. So there's the manufacturing in the US and all of that, but like now if other economies don't react well, like imagine the European Union, right? Let's say they don't react well to the tariffs, they don't lower the tariffs, and then so much capital will move from Europe to the US, right? People will invest it in the US. And then what can happen? Let's say they put some sort of currency control or some sort of like soft controls over where you can invest your money, although I don't see it
Yeah.
happening. then people can always buy Bitcoin. So Bitcoin is that global asset that's the safe haven, will definitely benefit from this thing. And we're already seeing it benefiting, right? So we're up 30% from September in Bitcoin terms, and NASDAQ is up 0% from September. I think that's a very important data point.
Listen, I hope it decouples. What do you think is going to be the trigger for it to decouple? Because right now it's trading like the Nasdaq.
No, but I just gave you an example that it's not trading like the NASDAQ.
Look, there's volatility, but I almost want to look at the chart. I want to overlay. Let's see if I can pull up the
It's hard.
Nasdaq.
It's hard to overlay, but because it's a different, different to- percents. But my point is, like, again, I agree that in terms of percentage terms, Nasdaq has gone down less than Bitcoin. But in terms of, like, if you had invested in Bitcoin or in the Nasdaq, right, you're definitely better off investing in Bitcoin, given these tariffs and given what it did to the Nasdaq.
At some point, I think at some point, um, for Bitcoin to be, we talked about this again in the morning. We said at some point people need to actually choose Bitcoin and go into it as a safety, as a risk off play. And right now people aren't. And your point was that it's because the liquidity isn't there.
Well, my point was against gold, right? So my point was that the biggest kind of advantage of gold and why people like it is that you can sell like $100 million, $1 billion of gold without moving the price. And so, like, if you want a safe haven, you want two things. One, you want the price to not be volatile over time, right? But second of all, you want the price to not be volatile when you sell. And so in that, Bitcoin is still lacking, which
But
for me,
other than Newsmax, gold seems to be the only one that's doing well. You know, and in times like these, although I think gold fell today as well. We can take a look. Let's see, gold USD uh, trading view. Right, gold is down today, but gold is down 1%. You know what's interesting? Like if we look at stocks, sorry, let me finish the point on gold. The point on gold is at some point Bitcoin needs to start acting like it, right? It should. It right now it's still there's some sort of beta on Nasdaq, up and down, but that like it needs to normalize it. People need to understand it for what it is, and they're not. And so it's a little bit frustrating to me. Although I agree with all these theses. In the long run, they'll be the right thing. In the long run, you have to go into Bitcoin. I don't fully understand why the market doesn't realize that, especially in a trade war or in an aspect where other countries can devalue their currency, essentially print.
well,
Why you wouldn't go into Bitcoin?
because we're still very small. That's why. When Bitcoin is $1 million per Bitcoin, then people will realize that it's like an asset that is a safe haven. But by then, it won't appreciate too much. Versus now, we still have more than a 10x for it to become as big as gold.
Yeah. By the way, I wanted to bring up another point. So look, I'm looking at I have stocks pulled up, and who's doing better than others? It's actually interesting. The market is everyone is down, but the market is trying to figure out the pricing. So Microsoft down 1.5%. Okay. Meanwhile, let's see who's a big loser. Apple, for example. Let's see, could Apple down 9%.
Well, because Apple manufactures in China.
Exactly, it makes sense. So the market is sometimes in these events, everyone thinks just get sold off. I actually like that there's a dispersion here. Amazon down 7%. Amazon doesn't necessarily manufacture, although they do, but I guess from a store perspective, they're gonna have.
Well, no, I think
I don't
Amazon, it
know.
makes clear why it's down, right? Because, like, to your point, you wanted to buy this thing for your daughter, and now you're on the fence. So it's like it's basically
That's true.
Amazon
The store perspective.
is bearing the brunt. All the retailers, if you think about it, will bear the
Yeah,
brunt of higher prices.
discretionary.
Yeah.
I guess all of them, but discretionary. So, where is it? Netflix, essentially even.
Well, the other thing is, like, we should talk about energy because, like, oil is down 6.8% today. And
Yeah,
what's interesting is that all of that, we didn't talk about the fact. So you need two things in order to lower rates, right? You need for the yields to go down, and you also need for inflation to go down.
yeah.
After these tariffs, I'm telling you, it's not going to be inflationary. It's going to be deflationary because if you think about it, people can still only spend, let's say people are spending the full amount. And I thought about it a lot, actually. There's this whole debate on Twitter whether the
Okay.
tariffs will be inflationary or deflationary. Think about it. What do we import? And I'm talking just about the US, and maybe it's going to be inflationary for the rest of the world. But in the US, what do we import? We import consumer
Everything.
goods. Yeah, yeah, but we import consumer goods, right? Like services and stuff are produced here, but we import our consumer goods. Now, do you basically consume, you already consume everything that you want to consume, right? So it's like, now if the price of consumer goods goes up, it's not like you will keep buying at the higher price. No, to your point, you will switch over to cheaper consumer goods. You will do something else. You'll buy less, or you'll buy, and so overall, I think this will create a deflation in the economy, right? So even if the price of Walmart or whatever goes up a little bit, it doesn't mean that you're going to spend,
Yep.
basically you're not going to like eat up that thing and just spend more. What you're going to do is you're going to consume less in Walmart. But then if you think of energy, energy will go down. That means that manufacturing things becomes cheaper, right? And that's also deflationary. So like all of that will lead to deflation. So I'm willing to bet on the record that these tariffs, when we look at the inflation data in the US, we will see deflation, or zero inflation. We're not going to see higher inflation. And that's controversial. I realize that it's controversial.
No, well, so maybe it is controversial, but the implicit in what you're saying is actually a very big assumption. It's like saying, "Hey, my finger is bleeding, so how do I stop the bleed? I cut off the finger." It's deflationary because we're crashing the economy, right?
Yeah.
You're gonna have less spend.
But then
You're
that's right. But then you're going to print money. My whole point is that the Fed will lower rates, right? If we get into a deflation, if we get into like, if inflation stops, and then I think the Fed will lower rates, and I think the government's going to print a bunch of money and give it to people.
But then how is that? Let's play that forward. If that happens, that would be very good for Bitcoin and actually
Yeah.
risk assets because they think they would need to go somewhere. But government printing a whole bunch of money and well, let's play this forward. You put on tariffs, you slow down the recession. Yeah, sooner or later than after, but sooner you need to cut taxes, cut regulation, give print money, give it back to the people, strengthen the consumer. Um, once you strengthen the consumer, once you strengthen the consumer, theoretically, it's almost shifts to like a consumption tax, right? It's like whatever you want to buy, you have to be more discerning in what you want to buy. Yeah, it'll be good for risk assets. It'll be good for Bitcoin in the long run because it also lowers the dollar, which the dollar is lowered. The problem, though, there's another wrinkle. I mean, the economy is so complex. So many of these pieces that we don't know about, or we don't know the second order effects about, is currently, right, we are in a deficit, right? So we're buying goods from other countries and paying dollars. We're sending dollars out. So a lot of the globe, the world, holds dollars. They are actually buying our treasuries. If they stop buying our treasuries or holding dollars because they can't buy as much, because we're not buying as much goods, then what? Who's
No,
going
I
to buy
don't
our
think it's going to
treasuries?
happen, because it's, to my previous point, the cleanest dirty shirt. Again, this would have been a problem if our economy was weaker than other economies, but others are going hit so hard from these tariffs. Like it's screwing them so much. And so like what else are they going to buy instead of US treasuries?
The
Seriously, no, it's kind of genius in the sense that, look, it's very painful for us, but it's much more painful for other people. And then what will happen is we will recover first, and then the rest of the world will recover later. So it's like we're taking the pain first, and then we'll recover more sharply.
I I hope that's the way it plays out and it should play out, but there's a lot of stuff there. For example, tax cut needs to go to Congress.
Hmm.
Now, Congress put a new bill. It's in the Senate today. Put a bill that any future, it's done. It's, by the way, sponsored by Democrat and Republicans. It's bipartisan right off the bat. Any future tariffs have to be approved by Congress. So it hamstrings Trump on what he has to do. This is a home run. This is one of those things. It's like when we saw Bitcoin way back in the day. You're like, if this happens, and this happens, and this happens, and this happens, that this must happen. But you need all of these steps to happen, and there's a risk that something doesn't, or moves, or shifts, and there's timing risk in people's lives. I mean, look, this is a very high stakes poker move that they're playing on the global stage.
Well,
Plus,
I'll
we
just
haven't
give
talked
you
about wars.
a private
Yeah,
conversation that we had where during the COVID crash, literally you were telling me Bitcoin is not working, Bitcoin is not doing its purpose.
yeah,
When we crashed from, what was it, like, we were kind of nicely going up uh to like 10K or whatever, and
yeah.
then suddenly like it crashed to like 3K or 4K for a very brief period, of 5K for a very brief period.
You were, yeah,
And I was like, look, yeah, of course it's not doing its thing because it's too small, right? So I'm saying the same thing now, which is like it's working exactly as expected, right? And I've actually heard some people, and I'm talking about the stock market and bonds. I mean, dude, if what you're saying is right, how do you explain the fact that the 2-year yield is going down? The 2-year yield going down means that people are buying our 2-year bonds with a fury.
yeah. The question is who? Is it our? Is it,
Doesn't matter.
is
I
it,
think we can do it. I really think that this will force the Fed to lower rates, and they will make sure to sell to, even if we need, we're going to monetize our debt if needed. You know what it is to monetize our debt? It's like we buy our own bonds. It's something that
yeah?
we
Well,
do.
that's printing.
Yeah. So it doesn't matter, but it's working. It's working. The yields are going down, and everything's working exactly just like
Yeah,
I really want our listeners, go please listen to our previous episode. It was a very dense episode, but we literally predicted this. We said he is going to front load the pain in order to lower the yields so
yeah.
they can refinance their debt at lower yields. That's exactly what's happening. And now we're like, oh no, the Nasdaq is down 5%. Yeah, it's down 5%. We're back to September last year. I mean, it's not the end of the world.
I wish that I and the rest of our listeners had your brilliant level of calm, cool, and collectedness. Everyone should learn from Shimon's Zen ways. I
Well,
love
I'm
it,
not
truly.
saying it's pleasant. I'm not saying it's pleasant, but it's just like we literally predicted this. It's like, yeah, anyway, I can come
No,
up with lots of,
can I change the subject a little bit?
yeah.
We talked about manufacturing here. If you have to manufacture here and the cost of labor is pretty high, it almost there's another catalyst that this whole thing does. This is look, if it works out, this is the most brilliant play that they're all going to get credited with, and as they should. This, if it works out, it's the most brilliant play because it also forces companies to become quickly, very quickly, efficient. And efficiency is the AI. So you're not going to hire a whole bunch of people necessarily. You're going to have some sort of people plus AI. So you're going to bring on, as you said 10 minutes ago or so, high tech manufacturing into the US. It'll force us to get rid of zombie companies. It'll force us to invest in higher level AI. But look, again, it's painful. These are major macro shifts of how we've done business. People are going to lose their jobs. People are going to lose their livelihoods. People, the housing market should come down, right? Lower rates will, on top of the fact that people might lose jobs, and they're doing Doge and getting in people in the government. They're getting low rates are coming down. People start moving. The housing market will
No,
unfreeze.
so here I completely disagree with you for the first
Oh
time.
yes,
I
great.
agree with everything you said until now, but why the housing
Yeah,
market will not go down because lower rates means that you can pay for a more expensive house at the same monthly payment. So if anything, it will unfreeze the housing market. And
yeah,
they stated that as a goal, right? They said we want you to pay lower rates for your mortgage.
yeah.
Then the other thing, the other nice thing, I don't know
Wait.
if we spoke
Okay.
about.
Well,
Yeah, go ahead.
I want to look. What's the other nice thing? Let's come back to. I want to touch upon the housing part. This is very important.
Well, because like I think we spoke about that. I can totally see the ads, refinance your mortgage. All the people that bought mortgages at the expensive rates, even the movement today, right, is enough for people to start refinancing and saving a lot of money on their mortgage payment, right? Where do you think that money will go? To consumption, right? You lower taxes, you have more money to spend. Where will that money go? To consumption. So all of that stuff will more than offset, I think, the tariffs.
Okay, so on mortgages, let me see if I can figure out how to share. I don't know if I can share my screen share X over here. I can't do it because of my stupid system settings. But anyway, um, typically when you decrease rates, mortgage payments go down and the risk assets or home prices go up. That's typical. I think this one will be different. I think we've been in such a locked, low supply environment that new houses of price of new homes have been under some areas of the U.S. prices of existing homes. I think that when this happens, the mortgage prices, everything will come down. People will need to move, and in fact, right now, 6 million Americans, 6 million people are behind on their mortgage payments in the U.S.
Okay,
Behind.
exactly. And so
Highest. This is highest ever. This is the
I
highest
know, but
ever. Over.
let me share. So this is, and Trump will be able to claim credit for this because check this out. These are live 30-year fixed mortgage rates, right? When Trump was elected here, January 10th, 7.24%.
Yeah.
Okay. And now we're at 6.63%. That's a huge, huge, huge actual difference.
What happened September 24? By the way, this how was it going down so much?
What?
Look at September 2024. Look at that
Well,
dip.
I think here there was still weren't the rates going down? I don't know. I
The rates are not going. This is the first cut. This could have been the first cut, and then they came back up.
I'm not like in the mortgage business. I bought my house at the peak of the market in 2021. I think the house still hasn't recovered. I still cannot sell it for the amount I bought it for. But my point is no, look at this. So Trump can definitely claim, right? He entered, this was the peak. This reminds me of Millet. Millet, all his
Yeah,
charts,
yeah,
like his first quarter in office, everything was terrible because the previous administration fucked him. And then
yeah.
like suddenly, it was very painful. And look, I met an Argentinian woman. We were on a vacation in Punta Cana in February, and she was obviously a very wealthy Argentinian woman, very, very well put together. She had two kids. It was an expensive resort. And I asked her, what do you think about Millet? And she's like, look, I love him, obviously. I think he's saving the country. And I was like, what do you think about the economy? And she said exactly what we're experiencing. It's like short-term pain, but definitely he's doing the things that need to be done, in order to like make it healthy again. And it's the same thing here, right? Like these mortgage rates will go down, people will have more money to spend on other things. Also, we're talking about tax cuts, but if you open manufacturing that is high tech, that is like, automated with AI, it should have higher wages, like higher wages than the same manufacturing plant, right? If they hadn't used, like a Tesla line worker makes more money than a GM line worker because they just use more sophisticated equipment and they have a
Yeah.
higher output.
But sorry, but what's the?
I'm
Can
saying
you
everything
explain?
is like on the one hand, right? He's opening our markets outside, right? The pain is that like things that we import will be more expensive, but then you get more money through lower mortgage rates, through higher salary, and through less taxes. And so on
They
net,
have to do all those things.
yeah.
I agree, but they have to pass all those things. They have to
Well, I
do all
mean,
those
look,
things.
I'm optimistic. The thing is, if you don't need reasons to be pessimistic, right? Like you could say, even before this crash, you could say so many people are saying, we're in a bubble, everything's gonna crash by 50%. You had lots of people that are naysayers. So I think I'm just trying to be optimistic.
Yeah.
Of course, bad things could happen. They could bomb Iran, and then like we go into a into a global recession. Very unpleasant. I hope it doesn't happen. What am I going to tell you? I mean,
Yeah. Well, April 3rd, the day before Liberation, the day after Liberation Day, Oh boy, it was funny. Lutnick went on. I think it was on CNN, CNBC. He's like, "Well, look, they're not necessarily inflationary. Like, if you want to buy Poland Springs water and then you like Fiji water, just because you don't buy Fiji water doesn't mean Poland Springs is going to go up." And when they use examples like that, I'm just like, you know, I don't know. Either they're trying to make it so easy to understand for kind of a layman's audience, or they're just lying because it's not exactly how it works. Okay, first of all, even if it does work again with water, you're fine. But two, if you're pulling Springs and Fiji is now instead of dollar fifty, why wouldn't you raise your margins and like raise it? Don't raise it to 150, raise it to 140, and
Yeah,
have
that's
higher
not
margins.
bad though. That's not necessarily bad. I'm thinking from a stock market perspective. If you raise the prices and make more money, it's fine.
That's great. Yeah, PE will come alive.
Yeah, I mean, look, I'm just like another thing I wanted to hear your take on is like, so people said, how was this not priced in? Like he was talking about these tariffs forever, right? So why, why the
I think
big
the
move?
market didn't believe it. There's a lot of people I'm seeing on Twitter that are saying like, "Wow, I didn't think it would actually happen. I didn't think it would actually happen." So there we go. People didn't really believe. They thought he was bluffing, or it wouldn't be as high. Look, remember yesterday after hours when he announced 10% blanket tariffs on everyone, the market pumped because they were expecting 20. And he's like, "Huh." And also these other bespoke tariffs in the market, boom, boom, just crashed. So
Yeah.
I think there's just so much uncertainty, and there's a lot of takes that it's even not priced in now that it's going to go down much lower. So
So do you think we're going lower or do you think we've bottomed out like totally?
no, I think we're going lower. Unfortunately, I wish we buttoned them down, but
In
I think
Bitcoin
we're
or Nasdaq or both?
every.
Everything.
I would love for this to be the bottom.
How much lower do you think we're going and why?
Look, I think we haven't heard from China, Canada, Europe. If they have other tariffs on us and we put other tariffs on top of them, if we do this in the tariff war, this is bad. I mean, look, how much lower is unknown. In a Great Depression, 50% lower. A major recession, which would be extremely painful. Like, hopefully, it recovers quickly. I think the market is right now kind of like, well, maybe there'll be some relief. Oh my God, it's 10% down. I could see us going down another 10%. You know, I could see us going down another 10, 15%, 33% from the top. That would be terrible in the S&P
That,
and
in,
Nasdaq.
that includes the rate cut, or is that just like until they cut?
No, without the rate cut, they need
Oh,
to
okay.
actually
Then
cut
I
rates.
agree. No, yeah, but I think conceptually we've bought, which means like even if we go down more, I think at some point they'll cut rates and we'll go back up. My point is, I think this is kind of like a fair value. What we're seeing today is like a fair value of the new reality because they'll have to lower rates, and then we'll see as they start negotiating and as they start removing more and more tariffs when they reach agreements and
Yeah.
as they pass the tax cuts, then everything will pump. But just like I predicted in our last episode, which is like first 6 months of Trump are going to be painful. So my prediction is we're kind of going to go sideways from now for the next 3 months, right? Because that's the first 6 months that he can
Yeah.
blame on Biden. Sideways, maybe down a bit, up a bit, but it's not going to be anything crazy. And then we're going to start going up. But I really don't think we're going to go down a lot more. I mean,
What
this
What do you think is the bottom?
I think this is kind of the bottom, kind of the long-term bottom. Again, I'm not talking about like I don't care if we drop 10% and then we recover 10% in the after 3 months. But my point is, because again, I can't predict the exact. But you're talking about a deep depression of 50% down from the top and staying there for a year. No, it's not going to happen. It's not going to happen simply because we have enough rates to lower, right? So as soon as that happens, we're going to start pumping the money, and that's what I'm saying. So when I say this is the bottom, I'm talking about think of it as a yearly average, okay? So I think like yearly average. Actually, it would be very interesting to plot. I plotted the Bitcoin yearly average. Maybe we can finish with that because we're coming up on time, but like I really started looking at the 50-week moving average is a very indicative thing because it cancels out a lot of the noise. Like if you think about it, it's like, yeah, there's news coming in and out, but if you look at the 50-week moving average, it's the purest trend, and there you can also see the bull markets and the bear markets like very very clearly. You know, when we're in a bear market, the price is below the moving average. We're in a bull market, we're above the moving average. Very very simple. So I'm going to do the moving average for
Sh-
Bitcoin and for the Nasdaq. Okay,
Yeah, show us your chart, sir.
so here, let's see. Okay, so this is Bitcoin. 50 week. 1 second. Week. 1 week. Okay. Okay, do you see my screen? So this blue
Yes.
line here, I'm going to remove this. So this blue line here is the moving average. So the moving average is at 76, right? So we kind of hit 76 and we bounced from it. I don't think, and it's going higher, right? So I think that's it. The bottom is in. Now, if we look at the NASDAQ, so this is the NASDAQ, right? So that's why I'm saying we are below. So we're below. The 50 moving average is
Yeah.
here. The 50-week moving average is here.
Yeah.
We're
Maybe
below.
you're right. Bitcoin is holding up better than.
Exactly. So my point is this is not going to like stay here. It's going to recover pretty quickly. Um, I think
I mean, listen. Let's see from your mouth to the skies above. But
because look here, the only time we're below the moving average here is when the rates were going up.
it's a bear market. We could be in a bear market.
But then the rates will still go up.
Look, yeah, to your point, look at the in 2019, 2020, we dipped and came back up. Maybe this is 2020 COVID, like boom,
I
you know,
really
get the. We just need to get the uncertainty out of the market. The market has a lot of uncertainty. We have to withstand, yeah, maybe 3 months, hopefully not more, hopefully not more than 6 months of pain. But 6 months of pain is fucking 6 months of pain.
I mean, yeah, think about it. So COVID in 2020 was in March, right? And then we broke the all-time high of 20K in Bitcoin only in December. So it was 9 months of sideways chop.
Oh my
I
God.
could totally see the markets just sideways chopping now for 6 to 9 months, but then
Yeah.
we'll go back up.
I mean, listen, 6 to 9 months in this current market would be tough. You don't think so?
No, I don't think so. I would be happy if the prices stay like this for 6 to 9 months. I would
You
be.
would?
Well, yeah, because I manage my fund. At the current price levels, I can sustain myself with the fees that I generate from the fund, and I don't need anything else to happen. Now, if we were to go down 50% from here, that would be
Yeah.
extremely painful.
Yeah. All right, my friend.
But
Next week will
hey,
be an
let's
interesting.
see. At least now
Yeah.
we have more opportunities to do more episodes because the news are coming in. I don't know if it's
Fast
correlation
and
or
Furious.
causation, but as soon as we started recording, interesting things started happening. So,
Yeah.
please, dear listeners, tell us what you think about the episode and give us feedback about what you'd like to hear about on future episodes.
All right, Shimon, it was a pleasure.
Pleasure as always.
Bye bye.